Um, so yeah, just a normal backtesting session. If you've got any questions, you can put them up in the chat. Otherwise, cover a few things today. The trade I took and kind of an everyday model. Uh, Anything else that you guys would like to cover. But if you're in the Patreon group or if you saw the trade I posted in wins and losses, I took a stab long. I'll send the picture into this chat really quickly if you want to study it. But just a quick scalp for a Monday. We're going to talk about economic calendar. We're going to talk about like an everyday model and what to look for if you want to actually see a clean setup and what to take um, about every day, including news, including days when we don't have news. But yo, what up, Rob? So if you take a look at that picture, that's the trade I took today. Just took a stab long off of this for Valley Gap here. Scalp 20 points up to the high up here, excuse me. And then was looking for the buy side, which eventually ran out during lunch hour. But it is a Monday, and we're looking at our economic calendar. If it wants to show up, doesn't show up. But we have 8:30 news tomorrow. So whenever we have 8:30 news, typically the day before, unless we have 8:30 news that same day, it's going to be choppier price action. It's not going to be super clean, especially when you pair that up with a Monday. You want to be looking for obvious setups and not setups that will normally play out on a clean day, maybe for 20 points, but a very sound, almost like the 2022 mentorship sort of setups, where we're sweeping liquidity. We have a change in state in a higher time frame, and then using the 5-minute or sub 5-minute for entry. So if you look here on the 15-minute chart and look at today, this is my typical analysis. When I'm looking to trade, it's a 15-minute liquidity sweep, 5-minute change in state, and then a 1-minute entry. If it pairs up with macro times, it's nice, but if you've seen the previous backtesting videos for sessions and specifically the AM session, you know this is a kind of a bread and butter setup. But right here at 9:30, we have a purge of the high, closes back below, and then a purge of this sell side. Now, we dropped down to a 5-minute. I noticed, actually, if you go back to 15, I noticed that we had this market maker buy model here using, you can kind of see the framework here, but sell side swept. We had London expansion, took out internal range, and then we went into 9:30 trying to seek the PM high from Friday, as well as the lunch high, which is my buy side draw, is this market maker buy model here. So if we go back to 9:30 here, us taking out the buy side and then moving back lower, I wasn't really interested in that price leg, especially if you go back to the 5-minute and the 1-minute. There's not really a clean entry for shorting opportunity. We ran up here 9:30, traded back lower, and we didn't fill any gaps in here until after the sell side was swept. So we had a higher time frame bias of bullishness, right? We had these swing highs up here was our drawn liquidity, and I was waiting for a sell side run. So we got this 15-minute sell side run, which you can see the candle here closes, or it sweeps this swing low, digs into a fair value gap into the order block too. So we have an order block, fair value gap, and a swing low broken, and then it closes above that swing low. So that to me is a high probability for a reversal. Then we drop down to the 5-minute. Look back, okay, where is our last up closing candle range? If we were to close above it, for us to indicate that we're bullish, right? So we swept liquidity here, trades back lower, and then we have a spike above this last up closing candle range. Dropped down to a 1-minute, and that was the entry I took using the 5-minute CISD, and then went long in this fair value gap, targeting 20 points, which was taken with this candle right here. So this kind of setup, you'll see a lot of the times at 9:30. If we have 8:30 news, you can use that as well. But a 15-minute liquidity sweep or a 5-minute liquidity sweep into a 5-minute CISD and then 1-minute entries is very, very common. And you can see we didn't even take out the swing low or even the entry point up until after we had taken out the buy side up here. So it is a market maker buy model, although this retracement going into 11 o'clock is unexpected for sure, but still played out nicely. Do you use SMT divergence as a confluence for trading the macros? If so, can you explain how to use SMT? Not specifically for the macros, but more as a reversal. So SMT, when you pair it with time, is going to be your most high probability SMT. So when we're looking at things like a 930 liquidity sweep, where we're commonly expecting 930 to displace, purge liquidity, and then reverse a lot of times, right? So in this case, if 930 had swept liquidity, and we look at ES, and ES hadn't, we go over here, like it's not crazy, but slightly lower, right? Breaks down. So using it just as a confirmation for reversal is probably the best tool. So I don't use it strictly as okay, there's SMT, we're going to get into a trade. It's more of, okay, are we reversing here? Are we purging liquidity? Have you broken market structure? So is there a market structure sweep or a breaker that we confirmed, or CISD, any of those three? And then are we looking for the SMT? If we see the SMT plus those things, then it's a high probability reversal. With something like down here, maybe if we, like these lows, if we had SMT here, this would be between the opening range. So if you look down at ES, whoops, with YM, I believe, dips it lower there. Yeah, we failed to. Nope. No, we do. We take it. Oh, we're between here. So slightly bullish SMT. It's not something that you really have to, excuse me, spot out every single time. But just having it in your tool bag. So time-based reversals. So at 9:30, at 10 o'clock, and at 8:30, a lot of times what you want to be doing is before 9:30 hits, or right at 9:30 hits, you want to be comparing the lows and the highs between 5 a.m. and 9:30. That's from, I think, Core Content episode, or Core Content month 10, where he talks about AM trends. So you're going to be comparing your highs and lows between 5 o'clock and 9:30, and then using your high and low purge at 9:30 as confirmation. But I want to take you guys back to the Notion, because there's plenty of good examples in there, and I want to showcase a few. Let me stop streaming here. Go over to Notion. So that 15-minute liquidity sweep into a 5-minute CISD and a 1-minute entry is seen on almost every single one of these. I also want to point out that every single time we have 8:30 news, there's going to be a low probability profile. Now, all these profiles here are not something that ICT has specifically said, but just going through tons of data. Me personally, I use these 7, and there's some screenshots and all of these. I've got a PDF if you're interested. Just shoot me a DM. But all these setups happen a lot, and I think I've only had 1 or 2 different days in these months where it wasn't similar to those 7. And these lowest probability ones are going to happen before we have 8:30 news. So if we look at 8:30 news, we have a low probability day. We have low probability day here, low probability day here. Here, not too much, but low probability days before 8:30 news are common. That doesn't mean you can't trade it, but that does mean that you have to be careful in the AM sessions. So if we look at, we'll go to a random screenshot here, but by the way, a lot of these 8:30 news days will have very similar profiles. But if we go to 15-minute liquidity sweep, we want to see that rundown and then a 5-minute change in state, which would be above this green, this blue candle right here, or this one over here where I have the breaker outlined, and then a 1-minute fair value gap entry is seen on a lot of these. Because here's the same exact concept where we have 9:30 purge here, takes out the low, and I'll talk about the purge specifically, just this candle signature where we're sweeping it and closing above on multiple different time frames. So we purge it, close above on 15, purge it, and close above on the 5. Last green candle or down closing candle that should have held. In this case, it'd be a bearish order block. So this 2 candle pattern in here would be your bearish order block. We close above it with displacement, and then we can look for a 1 minute fair value that pairs up with the CISD line. And we have one in here. Confirm it, trades back into there, or you could be using this as we reach up into the bisi liquidity pool. So you can go to basically any one of these days, and it's almost the same thing. 15-minute liquidity sweep. That's an hourly chart, but here's 15-minute chart. Trades above the last up closing candle range. Trades back down, and here's your 850 macro playing out. Same thing at 9:30. Actually, purges it, closes back above on the 5. So purges it right here at 9:30, or right after 9:30, and then closes back above this last up closing candle. And you can see this red line. You could have multiple different entry points using this bullish fair value gap as well. Now, when you pair that with macro times, it becomes even easier, especially when you're anticipating a second stage of distribution. But I would say, even if you don't use something like this, where it's an everyday model, or something to look for, especially when you compare it with true kill zones. So if we have 8:30 news, be looking between 8:30 and 10:30, or even 8:30 and 10. No news, you're gonna be looking between 9:30 and 11. But I think the best way, if you want to really study past price action, is whenever you're finished with the day, either that's the AM session, the PM session, whatever you're trading, focus on one session first of all. Don't be trading multiple different sessions. That's a whole different topic. But one session, after that session is done, either at the end of the day or after 11, whatever it may be, go in and every single day you want to take a picture of your 15-minute chart. I start from the hourly, but you don't even need the hourly, although I do think it's clean. So take a picture of your hourly chart, mark up anything that you think is important, and I draw a line right at 8 o'clock to mark out the kill zone. Then go to your 15-minute chart, mark out anything you think is important, buy side, sell side, fair value gaps, order blocks, all that stuff. Then I also mark out the times down here. Same thing on the 5-minute, same thing on the 1-minute. So going from top down, this is how you should study price. I think it's the best way where you can find patterns and find models, you refine down whatever you're trying to trade. So if it's silver bullet, you look between, 4 candles on the 15-minute chart, then down to the 5-minute chart, and then down to the 1-minute chart. I think you'll get comfortable with the price action, and you'll look at the different types of profiles you can see, and this is how you should properly be studying. I think ICT concepts. See 15-minute chart, liquidity sweep here at 9:30, close back above. 5-minute chart above the last down closing candle here. Obviously a choppy day, Monday before news probably. Yep, 8:30 news here. Here's your 12th. And you come back to it, trades into fair value gap, stop below the low. The fair value gap never reaches that. And then 10:30 we get another entry here after we sweep internal range sell side. During silver bullet hour, displaces up, fair value gap entry up to the buy side. So I would suggest, if you're struggling or even if you just want to take notes every day, this is what you do. Start at the 15 or start on the hourly, and then drop down and take screenshots of every single one and to categorize it either on Notion or whatever platform you use. I think Notion is the best just because you can do a bunch of fancy stuff like this, but it doesn't even have to be fancy. Just screenshots and put it on the calendar, I think is fine. Times you made. Talk about this one, I hope. And also notice that a lot of these high probability today, even on the 6 and 7, there's going to be a market maker model every week. I've said this on previous backtesting streams, but there's always going to be a market maker model every AM session. It could go to a random one, and there's gonna be a market maker model you can see, right? Here it's on the 5-minute. But the difficult thing is identifying what time frame that MMXM is on. So it could be as high as the hourly, it could be as low as the 1-minute. But your job is to find, okay, where's the liquidity sweep? What time frame is that happening on? And then spotting the MMXM, preferably before silver bullet hour. So if you can spot where is it likely to draw to on the higher time frames, and then find a lower time frame entry, then you'll be, I think you'll be all set. But don't get stuck on the 1-minute time frame. I think that's a a big problem that a lot of people have is sticking to the 1 minute time frame or sticking to the 5 minute time frame and not zooming out. Higher time frames are always going to take priority over lower time frames. So don't even drop down to the 1 minute unless you understand what the 15 and 5 are doing. Like on today, I was only switching to the 1 minute after I've seen a 15-minute liquidity sweep and a 5-minute CISD. So have a top-down kind of mechanical setup, and don't just base it on the 1 minute. Don't base it on a 1 minute liquidity sweep. Don't base it on a 1 minute market structure shift. It should be on multi different time frames, so you have the highest probability that it actually can play out. Okay. Yeah, this is called Notion. It's just easily organizable with different topics here. We'll go into more in depth on different models, but if you've seen the 930 model, that works with this kind of same setup. But all these high impact or high volatility drivers that come into the market at 9:30, at 8:30, at 10 o'clock, those are all going to be ending one MMXM and starting a new one. And that's going to be on different time frames. So at 8:30, you're going to be ending one MMXM. So you can see the market maker buy model right here. Ends it at 8:30 news, starts a new one. Okay. The 9:30s ends one, starts a new one. You can go to a different picture here. Here we just have 9:30. 9:30 here ends the first market maker buy model and starts a sell model. And you can see this is the same exact thing. We have SMT in this case. So this is what I'm talking about with the time-based SMT. So if 9:30 liquidity run, that's a very important time where if you see SMT, instead of a reversal, we can qualify that as a reversal. So 15-minute liquidity sweep, close below. Last up closing candle range or down closing candle range in this case would be your CISD. Trades below it. And then we have a 1 minute gap in here. Right at 9:45, short that, or another entry given during macro time, short that as it reaches down into this bisi, which is on a higher time frame. 15-minute gap. We're aiming for a 15-minute gap, and you're using the 1 minute as an entry point. So do your own research and go back into the old data, whatever you have to do. But even if you just start today or start tomorrow, go back as far as your trading view will allow you and just screenshot it that same exact way. And I think it'll benefit you in more ways than you expect. We'll go back to the charts here. You should be caught up on the 1 minute. 1 minute IMO shouldn't be touched until you have your trade ID and you need an execution pattern. I agree. I think the 1 minute is strictly for finding executions. And it's when it's, you already have a bias and maybe price is not showing you any entries on higher time frames in the 5 minute. But really, it shouldn't be, I agree. It shouldn't be touched until you know at least what the 5 minute is doing. If you don't know what the 5 minute is doing, or you don't have the patience to wait for the 5 minute, then your 1 minute entries are going to be, you're kind of just trading blind. You don't have any context of why it should play out, or like some people would be shorting up here, right? But you don't have the context of a 5 minute liquidity sweep and a CISD. But just because it traded into a gap here, maybe within premium, you're going to think to short that. When in reality, the MMXM's already been finished and we're starting a new one. So tomorrow we'll be looking between 8:30 and 10:30. Whenever you have 8:30 news, your 8:50 macro is going to be pretty clean most times, especially if there's a high impact news. I don't know why the indicator here is not working, but it is what it is. Also notice that when you're looking at reversals, instead of using a breaker or a CISD, if we have an inversion gap that forms near a reversal, most times it's going to be a very strong reversal. So if you have a gap that forms at the top and then it trades all the way through with no respect for that gap at all, that's typically, especially if we're breaking structure in some fashion, it's going to be pretty good. But if you look at this gap here, This is the first gap that was created in the AM session. And trade setups happen around this gap almost every day. So let me screenshot this. I'll add it to the Q&A post. So make sure you mark these out almost every day. Whatever your first fair value gap is on the 1 minute chart, or even on the 5 minute chart, study these. Go back to Monday. See, there's a sibi in here too. Trades up into it. Trades down. But 1 minute chart is probably my favorite one. Getting a 850 macro setup like 70% of the time with 830 manipulation can be your whole model. I agree. Or even waiting. I like getting in if 850 macro is clean enough, you can actually hold it all the way till 930 and then use 930. If the MMXM isn't complete, you enter during the macro time and then hold it till 930, and 930 will complete the MMXM and then start a new one. So you could use the macro times kind of as second stage of distribution, or in the case of the 850 macro as a entry point towards a higher time frame MMXM. But even something like this, study this. This is your 2022 model. And during silver bullet hour, it really only gives an entry at the start, consolidates for about 30 minutes, and then moves again during 11 o'clock to 12 o'clock. But one thing you should study is the consolidations that happen during silver bullet hour. There's always going to be, or most times, not always, going to be a 15-minute or 30-minute period where price is consolidating during silver bullet hour. And it's good to know that, just because if you're looking for an entry point and you have a tight stop, sometimes it'll come back, stop you out, and then run in the other direction. But what you can do, or what I do to predict the consolidation period in silver bullet hours, by looking at the 15 and the 5 minute chart. If you have a huge movement between 9:30 and 10, you can expect that first 30 minutes or the first 15 minutes of silver bullet to chop around. If you don't have any movement, look for the first 30 to 15 minutes of silver bullet hour to move, and then 10:30 to 11 to be put in the high, and then it trades back into, as it retraces or it continues after consolidation. But all of it is time based, right? So if we're looking at a model here where in New York expansion, if we want to see, if we're bearish, we want to see that high put in during the session between, assuming we don't have news too, between 9:30 and 10, expands, and then between 10:30 and 11, sometimes continuing into lunch hour, that low put in. If we're bullish, we see a low put in during 9:30 or 10, expands up to 10:30, 11, and sometimes continuing into lunch. So these are really the only two profiles you'll get every single morning session, obviously with variance. But this is the context you should be using. So in this case, we're bullish because we have 15-minute drawn liquidity up here, hourly drawn liquidity too. Right, these are smooth highs. We started right around here. So we have a bullish bias. So if we're bullish, we want to see that low put in between 9:30 and 10 and trading up, expanding until 10:30 or 11, sometimes into lunch. What do we see the profile here? A low put in right at 9:47, trades up. And then the high put in, at least on the session, it was delayed into lunch hour here, but it's a Monday. And we can go back and just look at the simple power of 3 for the kill zones, okay? 9:30, 10:30, 9:30, 10:30. Let me go back, go to February, or to go to Friday. In this case, we are bearish because we just took out a 4-hour pool of liquidity up here. This is on Friday. Purges liquidity and then trades back down. So we want to see the high put in between 9:30 and 10 and the low put in between 10:30 and 11. You can see here, trades up, pierces the high, trades back down, breaks below the down closing candle in this case. There's a 1 minute CISD, taps back into it, to order block, and then it trades down. So if we're bearish, okay, if we're bearish for whatever reason on the higher time frames, you're always going to be using your higher time frames for your draw, right? 15-minute, hourly, daily, anything like that. But if we're bearish, we see that high put in maybe at 943, trades back lower, and we form a swing low here at 1015. Okay, so this is 1015. This is, say, 941. Oops. When price does something like this, and we're bearish, and there's no reason for us to be bullish. We've seen CISD, we've seen sweep on the higher time frames, and we put this low in here at 1015. What do we know? There's a high probability we're going to do in this case. Well, if we're bearish, we want to see the low put in at a specific time, and that time has to be 10:30 to 11, occasionally into lunch. But if we form something like this, a low at 10:15, and we trade up, maybe we're tracing into a fair value gap. For me, I'd be pretty confident there's no reason we're going to take this high out again, and we're going to continue moving down into 10:30. So if we get another short entry, although we may be sweeping liquidity in this case, right? We may be purging some sort of short-term liquidity, but that low is outside of time. Here, the low is outside of time, right? 10:23. So all of these lows, just because it's the wrong time, you can use as continued short setup. So in this case, if we're bearish, although, yeah, this is right at 10 a.m., trades up to fair value gap, you could be shorting that. Trades down, trades back up. Is this low in the right time? No. You can short that. Every move up before time, before 10:30, really, I feel confident that we're going to continue moving lower, at least taking out every swing low that's formed. Trades up into the last top closing candle, trades back down into a fair value gap here on the 1 minute, trades back down into another bearish order block here, trades back down. Then when we hit 10:30, you got to be a little bit careful. But obviously, in this case, we trade all the way, continuing going into 11:10, and then we trade back up. But if you go to almost every day and you use that profile, think of this as kind of your daily expansion. If London is supposed to put in our high, if we're bearish, and New York continues and we put in that low during London close between 10:30 and 12, same thing with the bullish day, London puts in the low, continues into New York, London close puts in the high. Think of this as a profile for the AM sessions, right? There's going to be that kind of profile for every single thing, the simple power of 3. It is being recorded, yeah. If you go back to Thursday, in this case, what do we see here? Well, we take out lows. Oops. Purge lows. I mean, it could be bullish in this case because on the hourly, we get a higher draw on liquidity. Okay, so if you look at Thursday's down here. So we have a drawn liquidity up here on the hourly. Here's 9 o'clock. We're purging sell side, which is what you want to see, right? If we have a bullish bias, you want to see 9:30 or 8:30 purge the other side, right? So you want to have a stop run, sell stops in this case engaged, and then expanding towards a buy side liquidity pool. So in order to move up, we need to have a stop run to the sell side. In order to move down, we need to have a stop run on the buy side. Just talking about AM profiles here. So we had a bullish bias, 9:30 comes in. And here, purges 9:30, trades up above the last down closing candle, puts in a higher at 9:50, right? So this high can be treated as a new target for the AM session model. So as price retraces into a fair value gap, into an order block, whatever we're looking for as a bullish bias, in this case, we trade into a 1 minute gap, hold the order block, trades up, trades back down into the order block again, then eventually trades up into a gap here, and then we continue up to the high. But look at what time this high is put in, right at 10:35. So that qualifies this to be the high of the session now. But you can see that this high being a target using the higher time frame drawn liquidity, you can be confident that we're not going to come back and sweep this out. We may sweep it out once or twice on a low probability day, but on a high probability day, we will never touch this low again, whatever that low may be, whatever time it may be. And every single setup we see before that can be targeting a new high up until we reach this kill zone, the London close kill zone between 10:30 and 12, but more commonly for indices between 10:30 and 11. You have a 30-minute window where you want to see that high put in on a bullish day. You can keep doing this over and over and over. We can go back. Actually, if you want to screenshot this, I'll send it to the chat right now. We go back to Wednesday. Low probability day, right? This is before 8:30 news. We also had post-market NVIDIA earnings. So in this case, it's going to be difficult to see. But in this case, we have a low put in, trades up. We don't take that low out until during lunch session, but we failed to get above these highs. I'm curious to see if ES actually purged it. Let's go to Wednesday. Here you go. So Wednesday, it takes out the high eventually going into lunch hour. But these highs, these smooth highs put in at a different time are then targeted again. We just have SMT there, compared it with Wednesday. Yeah, and the PA is complete garbage there on Wednesday, but expected. Also, I think that was possibly before a news driver. Go back to Thursday here. Do you have 8:30 news? We do have 8:30 news. Okay. So keep that in mind, right? 8:30 news, the day before is going to be chop your price action, where it's best to wait for silver bullet. But that's also why Wednesday was pretty poor. And at the beginning, or even if you're seasoned, it's going to be difficult to just not comprehend that, but accept that there's going to be way more low probability days than expected when you first start off our search and destroy days, because originally taught NFP, CPI, FOMC are the 3 days you got to avoid. The days before that you got to avoid. But even on a regular 8:30 news day, you'll see that a lot of times price action is poor. It's not untradeable, but you have to be careful with what your targets are and how you're using the framework. But using that 15-minute CI or 15-minute liquidity sweep, 5-minute CISD, change in state, and a 1-minute entry, and then pairing it with this framework here, where we want time to put in our highs and lows of the session, you can find pretty high probability trades. So if we're bearish, we want to see something like this happens. This is what you want to see, right? If you want to screenshot this, you can. Our high put in between 9:30 and 10, and our low put in between 10:30 to 11, sometimes into lunch. And you just flip this for your bullish days. And I feel like that's somewhat of a cheat code, just because you can feel confident with the direction of the AM session, especially when you pair that with the 2022 model or whatever your entry type is, even the macro times. Like in this case, if we're still bullish, you can, even if it's a deep retracement like this, still feel confident going long after this huge run lower on the 1 minute. That's why you don't want to stick on 1 minute. Entering anywhere you see a bullish PD rate being held, targeting that high again. And you can see it's a nice 50 points, which I don't think anyone can complain about. Nice market maker buy model in here too. So yeah, if you want, we'll keep it short today. We'll have a longer one later in the week, probably like 2 hours or so. But if you want that PDF I sent earlier into the chat, or actually when I showcased it earlier, shoot me a DM. But yeah, just keep that stuff in mind, and then see how it plays out tomorrow. Tomorrow we're going to be looking between 8:30 and 10:30, preferably. just because of the news. But yeah, expect another backtesting session later in the week too. This one was recorded, so I'll post it later today. So if I don't see you guys tomorrow, have a great rest of your night or weekend or wherever you are. Not weekend, night or morning, wherever you are in the world. I will talk to you guys soon. Stay safe. Peace.